All right, guys, these charts over here, they are telling me that we might be seeing the end of the bear market. Alrighty, so what we're going to do, guys, is we're going to start off with this chart and tweet posted by Charles Edwards. I do believe this will frame the context in regards to this capitulation event and possible accumulation period leading to the next bull market rally. Okay, so over here, Charles says, it's a Bitcoin miner bloodbath, most aggressive miner selling in almost 7 years now. Up 400% in just 3 weeks, right? This is indicating capitulation. He's saying 400% more selling in just 3 weeks. And guys, this is depicted best right over here on the chart. If you draw your attention to the left-hand side of the chart over here to the bottom, you're going to see Charles Edwards depict the minor sell pressure chart right over here, right? And this is essentially going back 7 years. 7 years between that period and that period over here, and you can see that most recently we've had a drastic spike in mining sell pressure, right? Up 394% to be a bit more exact. That is essentially miners capitulating right over here. Now, I also want to quickly talk about this chart right over here, these red bands that you are seeing overlaid on top of Bitcoin's price, right? What exactly is going on over here? Let me quickly explain, because this is essentially going to give us a better idea or better understanding of what I want to talk about right over here on the 4 stages of the mining cycle. So, these red bands over here are depicting the Bitcoin production cost. Now, you may not be able to see it because it's zoomed out, but that's what this says over here, Bitcoin production costs. So essentially, the red bands are the cost, okay, the cost of mining Bitcoin. And along with that, we can see the price of Bitcoin, right? Rising and falling, rising and falling. So as long as the price of Bitcoin is higher than these bands, we know that the miners are essentially mining Bitcoin profitably, right? Because the cost is less than the cost of Bitcoin, right? So as long as this is true, we know that they are profitable. But as soon as you start seeing price dip into the bands, guys, as soon as you start seeing price dip into the bands like over here, and like what we are seeing right now, in these periods, we know that the cost of mining Bitcoin is actually greater than the price of Bitcoin. Or better way to put it is Bitcoin's price is less than the cost, right? So right over here, that's what we're seeing, guys. Bitcoin's price is underneath the band. On average, the miners are mining unprofitably, right? So all of these periods over here, they're unprofitable here, unprofitable over here, unprofitable over here, and unprofitable over here. So now during these phases of unprofitability, miners have one of 2 options. They can either go ahead and seek for outside funding to be able to facilitate their operations, or they can dip into their war chest, right? Now their war chest could either consist of Bitcoin, they could consist of dollars, or a combination of the 2, right? So if you had a smart, efficient miner, he would have been taking profits on the way up to be able to facilitate his long-term operations, because a smart, efficient miner knows that Bitcoin moves in cycles and he needs to be able to survive those cycles. However, there are Bitcoin miners who get a little bit too speculative and they get a little bit too bullish, and they think that, hey, the cycle is going to last longer than it is, and they do not actually cash out into enough dollars to safeguard or hedge against the possibility of prices actually coming down and them needing to survive that period, right? So what they are going to have to do is tap into their Bitcoin instead of tapping into their US dollars. So again, let's summarize. One of 2 options: outside funding or tap into their war chest. Okay. At the moment, with money so tight, right, outside funding is very, very difficult, if not impossible. I would say impossible at the moment. So miners have to tap into their war chest. Now, the efficient miners probably have a lot of dollars to be able to get them through this phase of, Bitcoin having very, very low prices, and they're likely going to be able to tap into their dollars because they sold at the top or sold near the top, right? Nobody's going to be able to time the top perfectly, and especially when you're running a business, you're not trying to time the top. You're trying to make sure that your business survives the long term, right? So you're hedging as the bull market rises. Now, The inefficient miners probably have a lot of Bitcoin stored because they've been mining Bitcoin this entire time, hoping that prices rise. But now, as prices are eating into their profitability, right, because they're unprofitable at the moment, they are going to have to dip into their Bitcoin chest, sell more and more and more Bitcoin. But recently, guys, what we've been seeing, and we talked about this in the video prior to the last video, we've been seeing price go up, or rather, sorry, let me say that again, price go down drastically while hash rate has been literally squeezing the miners. Hash rate has been going up and up and up and up. And again, so this is a representation of the costs that miners are paying, right? So as hash rate increases, miners have to pay that much more to be able to mine per Bitcoin. However, the price of Bitcoin has been going down. So this spread over here, guys, the difference between how high hash rate is and how low Bitcoin is essentially a representation of how hard the inefficient miners are getting squeezed, right? So the efficient miners are not going to turn off their machines because one, they are dipping into their war chest of US dollars, or probably also have secured outside funding for at a time where interest rates were low, right? Low interest rates, and debt was easy to attain, right? So again, there are many ways you can be efficient by just thinking long term, right? You can think long term, you can hedge in the futures markets your Bitcoin, right? Futures markets, guys, were initially created for commodity traders, right? And if you trade Bitcoin, or rather mine Bitcoin, like you were mining or farming any other commodity, you would be in a better situation at the moment. Now, efficient miners are probably in a good situation, so they are not going to turn off the machines, right? The inefficient miners are probably thinking, damn, hash rate needs to come down, hash rate needs to come down, but it's not coming down because the efficient miners are not turning off the machines. And you can also be efficient, by the way, by going ahead and finding cheap sources of energy. If you find cheap sources of energy, well, that's new miners entering the market who are going to push up hash rate even more. So efficient miners who are dipping into their war chests, they are fine. They're going to keep their machines on. The new miners who have found cheaper sources of energy, they are coming and pushing a hash rate up even further. And the inefficient miners are feeling the pain because Bitcoin's prices at the moment are not enough, right? Each Bitcoin that they do mine is not enough to actually fund their operations. So what do they have to do? They have to dip into their war chest and sell Bitcoin, right? So going back down over here, we can see right over here. Let's go back to our chart that is now very, very messy. We can see that this spike in Bitcoin miner sell pressure is indicative of a capitulation of the inefficient miners, right? So we're seeing inefficient miners get squeezed out. And this takes us very, very well to this matrix over here that I want to walk through with you guys very, very quickly, because this over here, guys, will give us a better understanding of when to start looking for the Bitcoin bull market to also begin, right? Because there is a strong correlation of how miners behave in regards to Bitcoin's price movement, right? So now I don't want to imply, guys, that miners cause the Bitcoin bull markets. Okay, I do not want to imply that. But what I am trying to say over here, guys, which is very, very important, that Bitcoin's price, right, along with the miner behavior in relation to the price, will give us a better understanding of which point of the market cycle we are at, right? So let me go ahead and simplify this matrix for you guys. We first start off with Bitcoin's price rising, leading into a bull market. This bull market draws a lot of attention for Bitcoin miners to show up. We have the Bitcoin mining rush, where a lot of miners start pouring money into mining equipment. And then we have an over-investment of mining equipment as Bitcoin prices start to drop, as people start selling off their Bitcoin, leading to miners having to flush out their inventory, right? Essentially, inefficient miners are being forced to sell over here. And then we get the final shakeout, right? And as we start getting the final shakeout, because miners are also turning off their machines, we start seeing hash rates drop, right? So hash rates only drop towards this period. All right, so let's get rid of the arrows for a quick second. And now I want you guys to draw attention to the gradient of the matrix. From light green to dark green represents rising prices, and from light orange to dark orange represents rising hash rate. What I want you guys to notice over here is that while prices are rising, hash rate isn't rising as much. There's a delay between prices rising and hash rate rising. The reason for that, guys, is because once prices start rising, that's when the miners start saying, hey, you know what? Let's order more and more machines. But there's a delay between when those machines are ordered and when they actually come online to apply their hashing power to the rest of the network, right? So the mining gold rush is a phase between where prices are almost ready to peak and all the miners actually begin to start coming on line with their hashing power. So you guys can see that in this quadrant over here, we have high hash rate, guys. We have really high hash rate, but prices are low, right? This is that phase where miners are very, very unprofitable, right? Which is what leads to an inventory flush out. And what makes things even worse for the miners, guys, is that during the mining gold rush, their equipment is actually more expensive. And that's because of this metric right over here, date to break even. What does that mean? Essentially, the equipment sold to them is priced according to how long it would take the miners to break even. So at the top of the market, those miners are going to be at its most expensive, and that's exactly when the inefficient miners tend to buy most of their machines, and then they lead themselves into a trap where prices actually come down, hash rate is super high, and they are very, very unprofitable, leading to the shakeout. The inefficient miners, on the other hand, are waiting patiently, right? And they buy out all of those machines from the inefficient miners, and the efficient miners end up getting really, really good equipment at bargain deals, allowing them to position themselves for the next rising bull market, right? So now the question is, where are we in this phase, right? Are we in the inventory flush out stage or are we in the shakeout? Personally, I believe that we are currently in the shakeout phase. Right over here, you guys might be noticing this little arrow here that indicates that we are in the inventory flush out stage of the matrix. But keep in mind that this matrix over here, guys, was pulled out from a blog that was written all the way back in around October, I believe. So yeah, some time has passed and crypto markets move pretty fast. I personally believe that we are sitting currently in the shakeout phase, which should mean that we don't have to wait too long before the next rising bull stage, right? It's going to take a few months, of course, but hey, few months for a mega bull market trend, yet again, is not too long to wait. And why do I think that we are in the shakeout phase and not in the inventory flush out stage or even in the rising bull market phase? Well, for one, guys, we are currently at a stage where the miners are beginning to capitulate, right? Looking down at the data over here provided by this chart, we are seeing that the miners have only now started selling off their Bitcoin from their war chests at increasing rates, right? This spike over here, we are just beginning to see it. So what does that tell us? It tells us that the shakeout has just begun. The shakeout begins with them beginning to sell out their Bitcoin that they've stored, them beginning to turn off their machines, right? So if you look at the hash rate here, guys, it's only now beginning to dip, right? Miners are beginning to turn off their machines and sell their machines to the more efficient miners. All of this has just begun. We need to start seeing hash rate actually drop and stay down, right? Over here, if you look at the chart here, the bands, we haven't seen this drop yet. If you go back historically, every time we've had these kind of, let me scroll down for you guys. Every time we've had these kind of phases where the cost of production, the cost of Bitcoin is more expensive than the price of Bitcoin, it is followed with a drop of the cost of production, and then we see the Bitcoin price rise again. Similarly, right over here during the 2019 market, we saw hash rate and the cost of production drop and then the price rise. Again, we want to see the actual cost of production drop like these phases over here, which will be followed by rising prices of Bitcoin. We haven't seen hash rate drop, right? If hash rate drops, that's when we can start saying, you know what, we're beginning to transition into the rising bull market phase. But at the same time, I still don't think we are in the inventory flush out stage either. I think we are more somewhere around here. The reason I don't think we're in the inventory flush out stage is because we are seeing that spike in the amount of Bitcoin being sold by the miners. And furthermore, if you scroll down right over here, guys, again, this is a view of the overall market and not just the miners. But if you look at this on-chain metric right over here, guys, which is the realized profit and loss ratio, right? This metric is indicating that we are seeing capitulation, but we have some months to go before we see a bull market. Now, there is a caveat to this metric. It is an on-chain metric, and you guys know my thoughts on this. You guys shouldn't again, look at it for its face value, and we'll circle back to it, right? There is insight on this. There is insight on this, but you have to be very, very careful, and you have to really, really think about what it's actually telling you. And we'll come back to that in a bit. But for now, let's look at it for its for what it's telling us. And what we are seeing over here is that each one of these peaks, okay, we don't know, by the way, if this is still a peak. This could go further down, but historically each one of these peaks have lined up with market bottoms. Okay, again, these red zones, guys, is essentially indicating when the market is realizing losses. Okay, when the market is realizing losses. Okay, so again, over here 2016, it kind of lined up with this phase. Again, the black line over here, guys, is Bitcoin's price. All right, so again, 2016 over here is lined up with the 2016 bottom. Right over here, 2019 lined up with this bottom. Over here, the COVID bottom was also lining up with the peak. And right over here too, you guys can see it lined up. So we are kind of indicating that, hey, this could be the capitulation event. But that doesn't mean that the market is going to go into a bull market immediately, right? When did we actually start seeing the rising bull market? It was somewhere around here. Okay, right over here. So it was a few months before we saw a bull market in 2019. Similarly, in 2015, 2016, it took us a few months before we started seeing a rising bull market, right? Similarly, right over here, I think it's going to be a few months before we see a rising bull market. That doesn't mean there aren't trade opportunities. In fact, this is the phase where most of the long-term Bitcoin holders tend to start accumulating their Bitcoin and wait for the next bull market to begin. So when you combine everything that we've talked about just on this page over here, right, where I'm expecting the realized losses to slowly start decreasing, turning eventually into realized profits over time, leading into the next bull market, combined with the fact that we are only just beginning to see the miner capitulation, miner sell pressure see a massive spike, I think that we are more so in the shakeout phase, right over here, transitioning into the rising bull phase. So we're not in the rising bull phase yet. We're not in the inventory flush out yet either. So guys, just a tad bit longer before we start seeing the next rising bull market. Now, how long that bull market rises for is a discussion for another analysis, and I have a few thoughts on that as well. But for today's video, we're going to have to wrap it up over here. Guys, if you've been enjoying this type of content, please let me know in the comments down below and hit that like button. This type of content takes a lot of time to prepare, and your feedback goes a long way in keeping me motivated to keep this up. I'll see you guys in the next.